Hi, I'm Hugh Selby-Smith, Deputy CIO of Talaria. The September quarter was a positive one at the global equity index level. However, performance was narrow with a small number of US large-cap technology shares dominating index returns, resulting in the US index doing better than those in other countries. Volatility remained high, with most of the gains in July and August, while in September, indices fell as investors faced the continuing impact of the pandemic, economic uncertainty, and geopolitical developments, including an imminent US election. The Australian dollar showed continued strength, up 3.8% against the US dollar over the period, masking a good underlying performance for many of the fund's shares. In light of all this, I'm pleased to announce the wholesale fund paid a quarterly distribution of 1.25 cents per unit, an increase of over 4% over the same period last year. Given the investment landscape is marked by a decline in absolute available income, this increase highlights one of the benefits of our differentiated strategy, an ability to generate income where others cannot. Looking ahead, savers face the challenge of the vast majority of bonds globally offering a yield of less than 1%. Not only does this mean many bonds are unable to satisfy a demand for income, but they will contribute less to portfolios as hedges at times of economic distress. For the first time in decades, there is the strong possibility that equity weakness will not be offset by gains in fixed income, which is exactly what we saw in September when equity markets declined. It seems likely investors will need alternatives, and there are good arguments as to why our fund would fit the bill. Thanks for listening, and for more information and analysis, please read the attached quarterly report or get in touch with a member of the Talaria team.